As many of you probably already know, FUBO has a shareholder lockup expiration period right around the corner. So in this video, I'm going to be telling you what to expect and giving you a few ways to prepare for this event. I don't think you're going to want to miss this, so stick around because we're going to be starting right now. Hey, what's going on? It's Pat from Top Ticker Trades. If you're new here and you want to learn how to use stocks and options to make your portfolio go parabolic, make sure you start now by subscribing and tapping that bell so you never miss an upload. What is going on, ladies and gentlemen? Welcome back to the channel. Welcome back to another video. This is the official FUBO channel for FUBO shareholders and for FUBO traders. So if you want to know all about FUBO and how to play it, this is the channel for you. So I know that a lot of you are kind of worried about the recent price action, and I wanted to make this video to explain exactly what's going on and how we're going to get through this. So first of all, let me start off by saying or restating the obvious actually, which is that we have the lockup expiration period coming up, and that's going to happen on January 1st. So most of you probably already know what that is, but for those of you that don't know, maybe I've got some new guys in here today, or new gals. The lockup period basically prevents major shareholders and company insiders from selling shares for a specified number of days, and this usually follows an IPO. And this is done pretty much to prevent the market from being flooded with a certain company's stock. Now, most investors or traders even are under the impression that a lockup expiration will automatically cause the share price to flop on the day of expiration. And while this can happen, it's not always the case. And with that being said, I'm going to tell you, or actually I'm going to show you some examples of other lockup expirations for other stocks so that you can see all of the different outcomes. And don't worry, this isn't going to take very long. But I'll also be telling you what one analyst expects to happen with FUBO during the day of the lockup expiration. And then we're going to finish up with just a few strategies that you guys can use or that are commonly used in situations like this. So I want to start off by using Roku as my first example because it's also a streaming platform and it reminds me a lot of FUBO, especially the price action. It's pretty much been an explosive stock, which is exactly how I perceive FUBO. But what I want to point out here is that generally there's a window of time around the lockup expiration period where you will see the stock drop a little bit because people are selling off in anticipation of a sell-off leading into a lockup expiration. So by looking at Roku's historic price action, it pretty much doesn't seem like it was affected at all. Roku's lockup expiration was on March 27th, 2018. And it did drop slightly around that time, but nothing drastic at all. It's not what I would expect to see out of a lockup or coming into a lockup expiration. But when you see how quickly the stock recovered, you're going to go nuts. Or not recovered, but how quickly it grew afterwards. By December, this thing was at $156. Today, obviously, it's at $360. But look, May 13th, $80.76. This is why I'm always telling you guys, not to freak out about your shares, about them dropping, and to pretty much ignore the short-term price action unless you need to pay attention to it because of some type of financial limits or margin or, something like that. But as you can see, these things, they can explode very quickly, these growth stocks. So keep that in mind for the future. What I didn't show you guys about Roku is that the month prior, before the month that I actually showed you on screen a second ago, the stock went up to about $60 and it came down from there into the 40s and then down into the 30s where you guys saw it at. But by May of 2018, Roku was already in the $80 range, and that's a $50 move from where it was at on March the 27th. So what's that, just a little bit over a month for a $50 move? So if we take a look at FUBO's price action, and we can take a look at what it did in just this month alone, we can see that it's very similar to Roku's price action. And that's a lot of growth in just 1 month. And that's exactly how these stocks move under the right circumstances. And the right circumstances are here, basically. And you just need to understand why it made this move and why it came back down to where it's at today. And most importantly, you have to know where it's going. But you have to understand where it's going in the long term, or at the very least, your outlook should focus on longer term than just next week or even next month. Now, if you look at ARK Invest, let's say Cathie Wood, one of the most successful investors around, her fund always beats the market and other major funds. And if you ever listen to her being interviewed, she always says that she has a 5-year outlook on any stock that she buys. So you don't hear Cathie Wood freaking out or complaining over a stock being down or panic selling because the company that she bought, or the company that she bought shares of, is doing an offering which will make the share price come down. But I'll tell you what you will see Cathie Wood doing when a stock she is holding goes down, and that is that she starts buying. She's constantly buying the dip, and as far as I can remember, and I've been following her for quite some time, her strategy is to always buy the dip. So it really doesn't matter why the stock drops or the stock that she's holding drops. Whatever the reason may be, she's going to be buying more because she's going to average down on her cost, pretty much get it at a lower cost basis at that point and make more profit when the stock goes up. But my next example for you guys is Uber, and it says right here that Uber shares dropped 17% in the days prior to it going into the expiration period. So that's kind of what we're seeing out of FUBO right now, but I'm going to point a couple of things out. On the 21st, we saw that FUBO ran up because we had a PR out saying that we were considering exclusive sports content deals. Then on the 22nd, we had an analyst upgrade, and the stock ran up 17.7% and ended up closing at $58.22. So that's 2 days of, the stock running up pretty significant, percentages. And then on that Tuesday, the 22nd, that was also the 5th day that the stock rallied, or that, it was basically on a hot streak. So on the 23rd, we had a downgrade, and on the 24th, we had a downgrade. So on the 23rd, we saw that the stock dropped 15% down to $52.59. On the 24th, which was the last trading session that we saw, it dropped 16% down to $44.18. So basically, it was a mixture of downgrades, and also probably because investors are assuming that we're going to take a loss or take a big hit when the lockup expiration takes place. And my last example is Shake Shack. So Shake Shack basically ran up 30% on their lockup expiration day because so many people were trying to short this stock, and unfortunately they got squeezed. This thing ran up 35% on this short squeeze. So as you can see, pretty much anything can happen. And I just showed you 3 different scenarios. One where the stock ran up on a short squeeze, one where the stock didn't do much at all, and one where the stock got pretty much smashed to pieces, or at least that's what I would call it. So you pretty much want to prepare or protect yourself in these situations. Now, normally what I would do is suggest for you to buy a put, but the problem is that the volatility, the implied volatility on these puts and on the call option side is insanely high. It's like at 180%. And basically what's going on is that the market makers are making these option prices, or trying to make them as unattractive as possible to protect themselves, because every time that somebody buys a call, the market maker now has to hedge and buy the shares. Well, this creates a vicious cycle because the market maker is buying the shares, which makes the share price go up, which also makes the call price go up. People keep buying, and then the market maker has to keep buying, and it's just a vicious cycle that's just going around in circles until somebody stops it, and it's not going to be me. So I'm going to tell you about this strategy, or a strategy called the collar, but it's got a ceiling and a floor, kind of like your living room. Haha! So anyhow, for a collar, you're going to have 2 options, and obviously you're going to also own the stock. And essentially how this is going to work is that you're going to buy an option which will protect you if the stock drops. So this will be your put option, but at the same time, you're going to sell an option to make up for the cost that you're paying for the put option, if that makes sense. And that's going to be a call option that you're selling, and you'll be buying a put option. So obviously the call option that you're selling creates a ceiling, and your put option would be your floor. And be sure to use the same expiration date on those, by the way. If the share price goes above the strike price on your call, you'll get your shares called away. And the put that you're buying will protect you based on what strike price you choose. But you'll want to play around with, with the strike prices for each of these and see kind of what works for you. And it's basically going to depend on whatever your risk tolerance is. So you'll want to mess around with that and see how you want to have it set up. While I have you here, I wanted to quickly tell you about the brand new First Trade app, available for mobile or PC. The platform will give you access to powerful and easy to use tools and allows you to trade with less restrictions, zero commissions, zero fees, and you can use the first link in the description below to download a free stock today without having to deposit any money. This will greatly help out the channel and is always appreciated. And now back to your regularly scheduled programming. Congrats, ladies and gentlemen, you've made it to the end of the video. If you like what you watched, make sure you subscribe because I put out videos just like this one every single day. And please do me a favor and smash that like button if I helped you in any way, because it really goes a long way in helping the channel out and keeps me motivated to make videos every single day. Now, there's a lot of work involved, a lot of research, and a lot of time and effort into editing and putting these out daily for you guys. You can subscribe from your screen right now, or if you want to watch one of my other videos, I'm sure YouTube has some good content picked out for you on the left-hand side of your screen now. Thanks for sticking it out with me till the end, and I will see you guys in the next video.